Hello, everybody. Thanks for checking in. My name's Mark. I'm the stock market jobber. I'm a former institutional trader. I've traded for two of the best funds in the history of the industry, two of the best managers, Steve Cohen and Gabelli. He's a market maker. Um, I was the head of trading at three institutional money managers where I oversaw all kinds of hedge fund strategies and mutual fund strategies and so forth and so on, and blah, 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 yay me. But let's not talk about me, let's talk about you and how you can become a better trader. Now, people ask me, like, gee, Mark, you seem to make these like incredible calls on the market, and, sometimes to within points of where it's going to turn. How do you do it? And the answer is, I don't. I let the market tell me what to do. I don't tell the market what to do. Now, if you've been checking in with us over the past few days, if you're one of our subscribers on your pen, please subscribe to stockmarketjobber.com, our YouTube page here, and let us know if you want any notifications, and you can check out our site to learn a lot more. But when I talk about letting the market tell me what to do, well, guess where I said that we're going to run into resistance around 410 back when we were around here. Now, how did I do that? Do I have a crystal ball? Do I have, am I a psychic? No. I understand how markets work, and I understand that there tends to be resistance at former resistance levels. This level 410 was resistance for SPY back here. It was resistance for it here. It was resistance for it here. This is what we call market memory. Sometimes a level that is important can retain its importance for a long time. So that's why I said, gee, there's going to be resistance around 410. And I think we got up to 409. So within 1 point of a $410 security is pretty, it's pretty accurate, right? So now if we keep going lower, I think there's going to be support around 390. And why is that? Well, this is an important level too. It was support back here. Then it became resistance. This happens due to buyer's remorse. When we look at a chart, we got to understand we're looking at market psychology. And buyer's remorse can turn a level that was support into resistance. Investors bought here, and a lot of them thought that they made a mistake once the share price went lower, and they tell themselves they want to get out. But they don't want to lose any money, so they go to sell their shares at the same price they bought them at. So we have remorseful buyers placing sell orders at the level that was support. If they're enough, the level that was support converts into resistance. Here we have the opposite effect. A level that was resistance can turn back into support. This is due to seller's remorse. People sell, and when the shares go higher, a lot of these people tell themselves, I made a mistake. I want to buy my shares back, but I'm only going to do so if I can get them for the same price I sold them at. So they place their buy orders at the level they sold at. So buyer's remorse can turn support into resistance. Seller's remorse can turn resistance into support. One of the main things that I teach, and one of the main things you need to understand, is that there are some price levels that are more important than others. And if you know where those price levels are, it's the key to successful trading. So if we keep going lower, I think we get a bounce around 390. If we move higher, we probably get another sell-off off the 410 level. So there's a lot going on this week, everybody. Make sure you check in. Once again, check out stockmarketjobber.com. Follow us on Twitter, and I will talk to you soon. Thanks, everybody.